All right, hi guys. Welcome back to weekly trading forecast for the week of 16th of November to 20th of November. So, hi, my name is Dylan, and with me is JJ. So, welcome back. Let's kick off with the dollar index. But anyway, last week was really a hectic one, especially on Monday. We saw that the gold actually crashed, but but the dollar didn't actually really appreciate that much as compared to the gold crash, right? So it wasn't really because of the dollar, but rather the gold itself actually crashed, as well as currencies such as Aussie, which is a commodity currency, and very closely related to the gold. Australia dollar didn't really went down a lot as well. All right, so that's the first thing for you to know. So the gold crash is really literally about the gold itself, and we'll come back to that. So first of all, let's talk about the dollar index. All right. So for the dollar index in the weekly time frame, one thing that you want to take note of is that it's still trading within this range, which has started forming since late August or beginning of September. So that's about 2 months, two months coming to 3 months so far. So based on the last week candlestick, we can see that the dollar wasn't really that strong. Like last week, maybe some people might see that one dollar is actually climbing a lot, but actually, as compared to the previous week, it's actually more of a pullback. So maybe when it came down here, it found support after this short pullback. There's a possibility it might continue to go down. And I think based on the added wave that we have right here, okay, we can see that this okay, the first wave has completed, okay, as well the third wave, and right now is in the fourth corrective wave. And with the previous the downward movement, it could actually signal the end of the fourth corrective wave. So if that were to be the case, then we are still looking to sell the dollar and expecting the dollar to complete the final wave all the way back to the 6 year support level at about 88.56 all the way to 89. Right. So so for the dollar index, if we look at the smaller time frame, actually last week is really much more of a pullback, and there has been two bullish wave completed right here, and just nice it actually found resistance somewhere near the supply zone right here. And if we were to pull a Fibonacci retracement, what we are seeing is that the resistance was actually found somewhere at 50%. Now, with I think with the current market condition, even on the fundamental level, there is a lot of uncertainty going on. Even for the U.S. Presidential election, is still not over. Although it's very obvious that Biden is going to win, but we never know what will really happen at the end of the day. So with the uncertainty still ongoing, that might still be a case for the dollar index to appreciate again. So we want to be really careful about it, and most likely, in my perspective, or rather for myself, I would want to actually try to trade within a range, right, rather than trying to follow a trend at this current movement. Okay, until there's really more obvious signs. So for the dollar index, what you can see is that if we look at this entire pullback as an uptrend in the smaller time frame, then we might want to wait for further pullback. Okay, somewhere to this level. Okay, back to this support somewhere just below it, 92.6, around that level. Is it could be an opportunity for us to buy. But otherwise, if we started to pull back, right, and we actually found resistance again when it comes back to the same level, and that's where we might want to try to sell it. So what you're seeing right here is that I'm trying to sell at the top of the range. I'm trying to buy when it's actually nearer to the bottom of the range. All right, so that's what I mean by trying to stick to a ranging strategy rather than trying to trade the major trend as of now. Okay, so that's for the dollar index. And so let's talk about the euro dollar. Okay, very much similar to the dollar index. Right now in the weekly time frame, okay, so we also see that the week previously, okay, there was also a very bullish trend. Okay, so last week is actually a pullback. They actually leave a very long lower shadow. So that could also possibly mean that in the coming week it might continue to appreciate based on the previous week's bullish trend. So I think one thing that we want to be reminded of is that this entire falling trend line, okay, based on the monthly chart, has been broken, not just for one day, but for the entire week already. Or in fact, it's actually for a few months, right? So I think it's just a matter of time before the euro dollar actually continues to appreciate. And I always want to make sure that I remember what the repeating patterns previously, in 2017. Okay, after this entire bullish wave, okay, it went to consolidation for a period of time, very similar to what we have right here. Okay, after this entire bullish wave, okay, went to a period of consolidation, and before we know, it actually went all the way up, and from the and actually completed the last, okay, the last bullish wave in this case. So that also that's the same thing. We can also apply added weight to this scenario. So if I were to do that, it will look something like this. Right, this is the first wave. The second one, of course, right now we're looking at the last one. So that's similar to the dollar index. Okay, so that's for the dollar index and the euro dollar. Next, I would like to pass my time over to JJ to share his trading plan for the week. JJ?
Okay, first would be dollar CAD. As we can see this week, at the the start of the week, dollar CAD actually finished a second similar wave in length to the previous this previous down wave, and it started going up again. So actually this week my plan is to continue selling the dollar CAD. Right now, as we can see on the smaller time frame, dollar CAD is after it got like a double top, expecting dollar CAD to continue in this range first, and similarly comparing it to oil prices, we can see that oil price has also reached the top of the range. So if oil prices continue going down this week, then the Canadian dollar should continue weakening, which means dollar CAD will continue to go up. So definitely this area was a previous support, and so price should be supported here, and dollar CAD should continue going up. And if it reaches this supply zone right here, then I will consider selling the dollar CAD, which is just nice, around 61.8 to 78.6 level of the Fibonacci retracement. And next would be Kiwi dollar. So as you can see, Kiwi dollar has actually been extremely bullish even after the Central Bank of New Zealand announced further easing and also mentioned negative OCR. And as of this week, price actually broke above this double top resistance, and before getting resisted at this previous high here. So actually, I am expecting the Kiwi dollar to continue falling first, and if price comes maybe two waves back to this level, which was the previous double top, and if this price turns out to be a resistance turn support, we can look to maybe buy Kiwi dollar at this level. But for now, definitely on the smaller time frame, we can see that it has broken out of this rising trend line after forming a double top, and this is currently just the first wave of retracement. So definitely we have to see if there is support at this level, then we could look to buy Kiwi dollar. So this would be my two analysis.
All right, thanks, JJ. Actually, I would just like to add on dollar CAD. Let me just share my screen again. So on the dollar CAD, I have the same view as JJ. I mean, for myself, I would definitely like to sell again, because if you look at in the bigger time frame, right? After dollar CAD actually went all the way down, it actually formed something like a symmetrical triangle, a ranging formation, and we have seen that the week previously, the price actually, after a fake breakout of the top, it actually went all the way down and closed below. And last week, although the price pulled back in a very strong manner, but we can see it's sounding more like a spinning top, so it's not really very bullish or bearish. But most importantly, it actually closed below this symmetrical triangle. So that is a very, I think that's a sign of a breakout, and in this case, we are definitely looking at a more selling pressure from here onwards. And therefore, if you were if you look at what JJ has shared just now, look at the 61.8% retracement. Obviously, right here there are very strong supply, a very good supply zone for us to consider to sell the dollar CAD again. All right, and that will also bring the price back to the symmetrical triangle for a retest before you actually continue to go down even further. All right, so that is for the dollar CAD. Just additional things to add on. All right, next, let's talk about the gold. All right, so for those who trade gold, definitely you have a very roller coaster like week. So we saw that Monday itself, after the vaccine news came out, that says that it can actually prevent, is it 90%? I don't know, something like 90%
Yeah,
of
90%.
of the virus or whatsoever. True or not, we have no idea. But after the news came out, and of course, Biden announcing himself as the victor, the gold actually crashed. So, but I think mostly it is on the vaccine news, which is something quite abnormal, because news like this, until it really happens, until the vaccine is really released to the public and people really get cured, or really is able to prevent the virus from spreading, then things like this will be normal. But that haven't really happened. It's just a piece of news. It's just a headline. So a crash like this, in my case, or in my opinion, I think is more of a institutional trade in this case. So in any case, like what I shared just now, gold crashed, but we didn't see the dollar actually appreciate that much. Gold crashed, but we also don't see the Aussie dollar coming down that much as well. Having noted that Aussie dollar is actually has a very high correlation to gold itself. You can see that this entire formation, this descending triangle, after the breakout, okay, you can see that it didn't actually fell as much as gold did. So we go back to look at the gold, right? Same thing, a descending triangle and a very strong breakout, but gold actually fell that much rather than Aussie. So if let's say, anyway, when the gold fell, right, and went back into this demand zone right here at 1,850, we saw that it actually got supported for the rest of the week. And last Friday, we actually saw the price broke out of this inside bar formation that is forming right here. All right, so the very first one is, of course, these two candles. After that, we actually formed another one on Wednesday and Thursday, right? And Friday itself, he actually went up and broke out of this inside bar. Okay, and that's also a second breakout of this entire descending triangle. So in my opinion, I think there are very little factors for me to believe that the gold will actually go down even further. Although that might be a possibility, but let's just say that if the fundamental is still favors a stronger gold, which I do believe, at least for the next 2 to 3 years, I do believe gold will definitely strengthen even further and even break historical high. And hopefully, if that really plays out, then I think this entire crash from last week will be recovered very soon, probably in this coming week or in the next or in 2 weeks' time. And if that's the case, and with a technical breakup in right now, we can actually look to buy the gold. So how we do that is very simple. A few ways, okay, using technical analysis. I mean, you can always put a trend line, okay, wait for pullback, pullback to buy in. We can always use Fibonacci as well, okay, for this entire way. Okay, look at somewhere 61.8, which is right now already. So I actually have a student actually share with me that there might be a chance for us to buy gold in the morning. Yes, when gold is actually appreciating, there's a lot of times that the gold actually appreciate in the morning. Singapore time, about 7, 8 a.m. or 9 a.m. during that period of time. So that's something you might want to watch out for, right? But and let's say if it really continues to go up, okay, the next thing that we really want to be watchful in terms of the resistance level, obviously in this area, it was previously a 9-year high as well. So definitely there are a lot of I mean, this is obviously a strong supply zone that we need to be aware of. And in fact, this is also a level a lot of people actually try to buy the dip when the gold actually started to fall. Why I know that because I was one of them as well. But I went up before it actually. I mean, I did the trade before it actually continues to went down. So, yeah, I was fine a little bit. That's all. So which is why I think there are a lot of buy orders being trapped here. So definitely, I think there's a possibility there might be a stronger pullback right here as well. So if we were to buy, okay, somewhere at this level is a very good time for you to exit the gold buy. Okay, but in any case, if it really went down even further, and it comes up with a second wave of a downtrend, the lowest I'm looking at, okay, in my opinion, is at 1,800 demand zone. Okay, this is the final demand zone I'm looking at. If let's say it really goes down even further, and that will also bring it to face with the 200 moving average. After a really long time, after not really long time, after 8 months, okay, since the pandemic. All right, so that is the goal for me, and last but not least, today I might not want to talk about Dow Jones, or rather a quick one. We've seen that it actually went up, okay, broke historical high, broke above 30,000, slightly a little bit, but it actually went after there's a strong pullback. Again, the rose was the jump was because of the pandemic, not the pandemic, I mean the vaccine news. But after it came down very fast. Okay, so probably it might just want to range within this area for a period of time, or maybe there might be even more pullback as well. So I'm not particularly very bullish on Dow Jones or the US stock market, but it does seem to me that for the foreseeable future, the US stock market might still continue to go higher. Seems to me that this is how it always turns out until central banks really started to actually curb back on their easing of their monetary policy, and that's where the stock market may take a turn. Right. So yeah, that's how I look at it for the US stock market, or rather for Dow Jones specifically. And last but not least, I just want to talk about dollar against Japanese yen. So I think that Japanese yen is still pretty strong in this case. I think because like if we look at the daily time frame, the only thing that actually resembles gold crash is actually the dollar yen. You see, when the gold actually crashed, okay, dollar yen was the one that actually jumped. Okay, which means to say that actually there's a lot of borrowing on Japanese yen, and I don't know, maybe the money flow into the US stock market in this case or somewhere else. But anyway, this is the only one that has a similar movement, and we saw that after it reached a high similar to the gold found a support, dollar yen found its resistance, and it has a very strong reversal at the top of this entire structure. Even if I were to pull this entire trend line all the way down, it just nice got resisted at the previous high right here. And it has already started reverse with all the formation, the ranging right here, it has already broken down. So dollar yen is another pair that that I think has a very good chance for us to continue to sell. So in my case, I'll just be patient with it, okay, wait for a pullback, and then try to sell. I mean, as of now, obviously this is a good price to sell at 105 to maybe 105.20. Yeah, I think that should be somewhere at 51.8% as well, right? And maybe slightly higher. So I mean that's for dollar yen. There's just something else I want to share because I think this does have a very good opportunity for us to actually trade this pair. All right. And in fact, if you look at other Japanese yen pairs, okay, you may see the similar kind of a trend. All right, for the Japanese yen. So before we end, just want to take a look at the calendar itself. The calendar for this coming week is a lot on the Australian dollar. RBA Lowy is going to speak on Monday and Wednesday, and of course the release of their monetary policy meeting minutes on Tuesday 8:30 a.m. Core retail sales for the US, ADP non-farm employment change for Canadian, Of course, of course, the CPI on Wednesday, and Australia-wise, there's another important one, which is the employment change. This one will be important, and of course, unemployment rates, because the Reserve Bank of Australia is very particular about the labor markets right now. They really don't want to see unemployment rate going up again, stuff like that. So we can see that the forecast right now is still worse than the previous because of the recent pandemic, the recent lockdown and stuff. So hopefully it's not that bad. Okay, but since this week is going to be heavily on Australia dollar, maybe just last but not least, we just take a quick look on the Aussie dollar as well. So if you look at Aussie dollar, all the way in the monthly charts, it's actually trading somewhere in the middle. If you base on this full trend line, okay, if you base on this one, okay, obviously the price has already broke above. If based on this one, all right, the price is still, I mean, there's still a lot of space for it to go up even further. And obviously, if you look at the monthly chart, it's definitely below its average price. So that tells us that Aussie dollar might go up further. Another reason Aussie might actually continue to appreciate is that if the gold continues to appreciate in this case, I do believe it will actually push the Aussie value even higher, right? So that's another reason. Right now, if we look at smaller time frames such as the daily charts, we have seen a very obvious breakout of a descending triangle right here. Very similar to gold as well. It's just that the only thing that's not similar from last week is the Monday crash. All right. But other than that, if the gold were to start to recover in this case, and hopefully there are some good news for the labor market for Australia, then we might see the Aussie dollar continue to climb in this coming week or the next couple of weeks. All right, so that's a very a quick view on the Aussie against US dollar. All right, so that's the end for our weekly trading forecast. So thank you so much, and we will see you again next week.